for a Q&A. You're more than welcome to either type your question out in the chat or raise a hand and we can unmute and allow you to speak as well. Just so you're all aware, the webinar is being recorded. This is just so we can use it on socials and potentially email it to people that weren't able to make it with us this evening. Hopefully everybody can see my screen. And again, if you have any issues, we've got a number of the Yielders team members on as well. So you've got Marwa, who is our senior technical lead, Josh, who's our senior investment analyst, Jake, who is our partners analyst, and I believe Medina is also on the line, who is our operations analyst. So anybody that has any questions, they will be monitoring with the chat function. And as I've said, you know, if you have any questions throughout, type them away in the chat and we'll pick them up in the QA after I've run through the slides. So an introduction to the Top Yielder program for Yielders. So who are we? Yielders is the first FCA regulated Islamic fintech platform in the UK to be directly authorized by the FCA and the only Sharia certified of its kind. What we do is provide accessible real estate investments from as little as £100 in a very simple, easy to use manner via our award-winning platform, and assured tenancies with 100% equity backed asset structures and tenancies with tier 1 covenants and local housing authorities and people that are able to minimize voids and maximize profits for our investors. We have investors from over 20 different countries and generally aim to provide a net return per annum of around about 8%. In terms of a little bit of background of Yielders, you may have heard of us, and if you haven't, this is just a view of what we've spent the last 5 or 6 years doing. Looking at it summed up on a page doesn't seem like an awful lot, but I assure you a lot has been happening over the last 6 years since we've been a business. So back in late 2015, the business was incorporated. In 2016, we worked towards a beta release of the platform. So this was just to ensure we could get to market. In 2017, we went through the rigorous process, which started in 2016, took a whole calendar year into 2017 to become directly authorized by the Financial Conduct Authority. At the same time, we were also achieving our Sharia certification to become a Sharia certified business as well as an FCA regulated business. And due to our efforts that year, we were presented with the Global Islamic Economy Award in Money and Finance from the royal family in Dubai, which was obviously a fantastic accolade for us. 2008, we did a small pre-Series A funding round just to set the business up, take on some staff members and get the technology developed in-house. And also in preparation for Brexit at that time, we managed to achieve regulation in some other European jurisdictions. 2019 was a fantastic year for us. We completed a Series A funding round, partially on Cedars. We were really able to scale up operations, scale up the technology, and have a new platform delivered, and relaunch our secondary market function, which is a fantastic win. Last year, obviously, everybody knows about the difficulties that were faced in 2020 with our new friend COVID. We did a lot of work in the background last year around open banking API. So again, something for our strategic purposes in the future, the way that banking is moving, and also had additional year-on-year growth with our user base. This year is all about getting back on track in terms of AUM. We hit the sorts of levels that we know we are capable of, which is predominantly the reason for reaching out and increasing our network even further with webinars such as this. Some key figures along the bottom that you can see: we are now close to 7,000 users, which makes us one of the largest real estate crowdfunding platforms in the UK. 5 full cycle life investments that have happened. So these are assets that we've acquired and have gone through the entire investment term, either exited or replaced onto the platform. We have a fantastic reinvestment rate of 72%, which is testament to all of our investors having a good experience, trialing it with the low barrier to entry of £100 and then coming back and reinvesting with us. Average returns achieved over the last year was 4.3% net on rental income and generally an 8% average per annum on a combination of the rental income and capital appreciation. And we have currently 19 active assets, soon to be 20 in the next few days, inshallah. Why invest? Now, there may be a number of you on the call who already do invest, and there may be some of you who haven't actually started your investment journey yet. Whether it be with us or alternatively, investing should be a part of everybody's life, not only saving but investing. Now, generally, the three predominant reasons that you can see on your screen: to have a passive income. So I'm sure many people on the call today have full-time jobs. You spend all of your time working your 9 to 5 or 9 to 6, 7 in some cases. Investing allows you to earn a passive income, so not substituting your time for increasing your wealth. Which brings me nicely onto the second point: growing your wealth. Aside from earning and using your paychecks that you will have to pay for mortgages, rent, bills, etc., it is a way for you to be able to sustainably grow your wealth. So rather than just leaving funds or savings in a bank account, we've provided a functionality whereby you're able to grow your wealth in a risk-free manner, backed by a Sharia certified infrastructure, a regulated infrastructure, to ensure that safety and security of your funds is of paramount importance to us, and also executing on the returns that we have been able to do over the last 5 years. And finally, compounding, using the basic term of compounding and using our platform to ensure your wealth can continue to grow. So rather than after a 5-year investment term with us, taking all of your funds out and splashing the cash, going on a holiday, buying yourself something nice, reinvesting that and consistently reinvesting your money to ensure that that wealth is grown. There is a lot of savings. We done an estimation a couple of years ago when starting the business, close to £3 billion worth of Muslim funds within the UK that we believe is relatively untapped, predominantly being because there wasn't a tool or a system like ours for you to be able to easily invest your money and track how you invest and grow your wealth. So just a note for you all to think that, if you're not currently investing, maybe it's time to start. And if you are, then, this is a perfect sort of webinar for you to be involved in to see how we can help you along that journey. More than just a website. So you may have visited the website at www.yielders.co.uk. It looks like a fantastic tool from the front end. You're able to calculate returns on any of the investment opportunities that we've got. You're able to track what your investments are, how much you've been paid on a monthly basis. But really, a lot more happens. It's a platform, and from the back end, we're able to administer thousands of payments on a monthly basis at the click of a button. We're able to automatically onboard each and every single one of our investors that comes on, has a positive onboarding journey with us. It's very simplified, easy to use. What we decided to do very early on was simplify the language and get rid of as much jargon as possible to ensure that we're able to provide a very streamlined, transparent way for people to invest with us and come on board and become a yielder. Reinvestment opportunities are there via our secondary market, extremely liquid secondary market. I think, just to give you an example, we had someone wanting to sell £10,000 worth of shares the other day, and without even, I think within 25 minutes of being listed, they'd sold out, without doing any marketing or anything like that. I'll also touch upon later about the liquidity available on the platform, but very active secondary market. Demand for us is at an all-time high, which is fantastic. You're able to access your profile anywhere in the world across all platforms, so on your phone, tablet, or laptop, desktop, and really it gives the onus back to investors. We've given you back the power to control your investments when it comes to real estate, giving you the option to diversify your real estate portfolio, however little or large with us that may be. The types of investors that we have, obviously have the everyday retail investor. So these are the what we define as retail investors that invest from as little as £100, targeting yields of around 4 to 6% per annum. You get paid on a monthly basis straight to your e-wallet. You'll get an email on at the first of every month to say that you've received your dividends, and you're able to start earning from the first of of the month after you've invested. So, you know, the asset structures that we've defined and created allow for immediate earnings. You're not waiting around for fluctuation of shares or anything like this. It's, you know, from the moment that you're invested, the following month you're paid a dividend. We then have two types of categories of investors which are quite similarly linked: sophisticated and high net worth. So sophisticated investors have access to pre-funding and development opportunities. On these sorts of projects, we look for returns of anywhere between 10 to 18%. Sophisticated investors are effectively investors who have investment experience or have worked in finance or understand real estate, maybe have some buy-to-let properties or along those lines, is what we classify as sophisticated. And high net worth, I think, pretty much speaks for itself. So investments of over £50,000, early access to all of our pre-funding and development opportunities, and effectively potential bespoke investment opportunities that we can also provide to investors as well. So really this webinar is focused on the latter two, sophisticated high net worths that we classify as top yielders, to get involved in the pre-funding product that we have, but also potential development opportunities that we have in the pipeline available to us. Now, how does all of this work? It sounds all fantastic. I'm sure you're all sat there thinking, okay, what does this actually look like for us? So simply a 6-stage process. So we've got a very streamlined, stringent process that we follow now. Having been in the game for the last 5 or 6 years, we've managed to really streamline our processes and make this as straightforward a process, not only for us and what happens in the background with our staff, but also for yourselves as investors. So we will, number one, identify opportunities. We are inundated on a daily basis, and we have some pretty strict criteria and thresholds that each of the assets that we receive has to go through before we bring it to our investment committee for approval. Once it's approved at investment committee, we then begin the acquisition process. So each of our assets are held and acquired within their own SPV structure, a special purpose vehicle. It's effectively just a limited company which is created for the acquisition of each asset. Point number 3, now this is where our high net worth and sophisticated investors do come in. We have a large network and a pool of funds effectively set aside from these high net worths to say, right, you know, we've got 10 investors at £50,000, for example, and they will all pile in once they've seen all the financial summaries and the details of an asset that we're looking to acquire. We will use those funds to go out and purchase the asset. So those high net worth top yielder investors become the shareholders of that SPV and are paid their first month's rent entirely based on their shareholding. So they can also at this point decide whether they want to release 25%, hold on to 25% equity for the entire time of the investment term, or whether they'd like their entire capital paid back to them the next month. Before obviously acquiring the assets, we do have all of the rental agreements in place. So we have a rental agreement with tier 1 covenants, with local housing authorities, councils, or other tier 1 tenancy providers in place, so the asset is producing an income from the moment that we acquire it. Now, point number 4 is you've got to imagine an asset which is producing an income. That is the point at which we will then list onto the platform for the smaller retail investors to invest in. Now, this is how effectively, after that month of being on the platform, following our month-end processes, we would then have the ability to pay back any capital, or in the instance that we're trying to speak to you about, roll over that capital back to you as an investor into the next asset, compounding, as I was speaking about before, so on and so forth. But you will always receive your dividend on the first of every month. And if you are a high net worth investor, then your capital will be returned to you generally on a month-by-month basis for you to decide what you would like to do with it next. In terms of the development opportunities, now they work in a very similar fashion. We will identify the opportunity, we will assess the criteria against our target thresholds, create the structures for shareholdings and directors for investors, begin the fundraising process. So this will be a process whereby we would have had an asset planning permission approved, contracts administered with building firms, electrical and mechanical firms. They will be ready to go, and we will raise the funds to that effect. We will then complete the development following acquiring the asset, and the development will be looked after by a third-party risk surveyor and a contract administrator who will assess each of the monthly developments, and we will release funds. At the end of the investment term, which is already predefined, generally between 6 to 9 months, 6 to 12 months with any development opportunities we have, we will then look to dispose of that asset either via the platform if we're able to tenant it, so we could then use the liquidity via the platform, or obviously an open market sale, dependent on what ticket size we have raised for. In terms of examples of this, I guess, we've had the Albert Terrace and Park Hotel developments that we've been working on that are close to completion and should be exited towards the end of this year. They'll be completed by next month, where we'll begin the tenancy process and get them let out. They are now closed for investment, but just to give you an idea, they're available on the platform for you to have a look through and understand the sort of deal that we've previously executed against. Now, what about pre-funding? The pre-funding product that I've touched upon a couple of times, and you would have remembered point number 2 on the original flow, where we acquire funds from high net worths. Now, it's a new way to invest into properties, unique to us at Yielders. As a pre-funding investor, you'll have flexible control over your investment. It's like, and this is the way that we like to describe it, an interest-free liquid savings account that earns you an income. Now, predominantly our investor base is Muslim, although 20% of our investors are non-Muslim, because we obviously cater to everybody. However, with that in mind, we don't have any interest or any financial products, traditional financial products associated with any of our products. So everything that you earn is equity based and cash against that equity effectively. So the way that this works, we have an investment committee that sits on a weekly basis that approves any of the structure of any of the assets that we have we've conducted the due diligence on. We then provide first view to our list and our network of high net worths, ultra high net worth, sophisticated investors. They get first access of any of the deals that we do have approved. If they decide that they would like to invest, then they will confirm their investment amount. At the moment, this is not available on the platform, but towards the end of Q1, we will have all of this automated online. But we've obviously got a number of staff members who I've already mentioned today who will handle this process end to end, handhold you through it, and give you a positive experience. So once they've decided that they want to invest, they will hold 100% of the equity for a predetermined period of time. So if all of the investors agree they want to hold and consume the rental income for 3 months, that's something that we're able to provide. And then they make a decision whether they want to hold 25% of their equity for the entire 5-year term. All of our investment terms are generally 5 years, or whether they would like all of their capital paid back to them the following month. If they'd like all of their capital paid back to them the following month, on the 1st of the following month, they will have their rental income paid back to them. And at the end of the first week within the next month, all the capital will be returned to them. So if you decided to invest £50,000, you will have all of that £50,000 returned to you the following month with whatever you have earned in terms of rental income. So for example, if you're investing in £100,000 property and you're investing £50,000, you will earn half of the rental income for that first month, and then you'll have all your capital repaid back to you. We then have the opportunity for cyclical reinvestment. So we'll have the next £100,000 property available the following month, where you can decide that you want to invest that £50,000 again, and that can continuously work and recycle your funds for you. This gives you the opportunity to have a geographically diverse portfolio. We have assets all over the country, from London, the southeast, all the way up to Manchester, the northwest, up in Middlesbrough, all over the UK, differing yields, differing values, just to give that ability of diversification and de-risk the asset class further for our investor base. You'll also be joining a group of like-minded investors and a community that we've built here at Yielders. The top yielders, as we like to call them, are like-minded individuals who have large amounts of funds that they're not quite sure what they want to do with them. They may be saving and investing towards a larger purchase for themselves, but what we have provided is a facility to be able to grow your wealth, compound your wealth, and give you the ability to invest, reinvest, and earn in a very hands-off, easy to use and easy to understand manner. Now, what does this actually look like practically for deals that we have approved and are available now in our pipeline? So appreciate there's quite a lot going on the screen at the moment, but let me walk you through it. So we're going to start on the top left-hand side. Wembley Fright Building is an asset that we are due to complete on next month. So this is an example if, as a high net worth or a sophisticated investor, you have £100,000 to invest with us. In month one, you will invest that entire £100,000. And if you decide that you want to hold that entire £1,000 in this one asset, you will earn, based on the 4.35%, £4,350 per annum for doing absolutely nothing. Or alternatively, what you will say to us in month one, I would like to retain 25% of my holding, which in this case is £25,000 for the entire month, for the entire term. And I want my £75,000 returned to me and placed into the next asset. So the next asset we have available, which again is approved by the IC and is ready for investment, has a slightly higher yield of 5.3% based on where it's located in Scunthorpe. You would then invest that £75,000 into the Scunthorpe deal. Now, you could decide to hold that £75,000 for the entire 5 years and earn £3,975 per annum, or you can hold a 25% stake, which 25% of £75,000 is £19,000. So you now have a holding of £25,000 in one asset, £19,000 in another asset, and they are continually earning you these per annum amounts for 5 years. Now, following month two, you would have had £56,000 now returned to you, which, because you've got 25,000 held in Wembley, £19,000 held in Scunthorpe, £56,000. We have the next asset available to you, which is available in Essex. This is almost approved with the IC, and we would be ready to accept funding for this towards the end of February. But again, you would place that £56,000, earn your first month's rental income, make a decision if you want to keep £25,000, 25% holding, where you would then earn that return for a 5-year period. And then finally, the final piece of the puzzle, you would have that remaining £42,000 paid back to you of your original £100,000, invest it into our fourth and final asset of a quarter cyclically available, which again is a slightly higher yield because of where it's based. A 6% yield, you could decide to hold the entire amount or only 25% of a 42k holding, which is £11,000. So effectively, at the end of a pre-funding cycle, you have a £25,000 holding in one asset, 19 in another, 14 in another, and 11. You've spread your risk, you've diversified your portfolio, you're earning a return from each of these assets on a monthly basis, excuse me, for doing absolutely nothing. On a monthly basis, you're going to receive an email. You'll receive 4 emails to say your rental income has come in to your e-wallet for each of these properties, and you've had £31,000 of your original £100,000 sent back to you. I hope that's not too much information to take on. I'm going to leave that on screen for a couple more seconds just to give you the opportunity to consume it. Obviously, more than happy to answer questions in and around this during the QA, but that effectively is what we've described to you as a pre-funding project. If you're able to commit a certain amount of funds to us, we are able to ensure that there are investment opportunities available. You're earning a continuous return. The capital is cycled across 4 different assets, diversifying your portfolio, de-risking your portfolio, continuously earning. You get a lump sum of capital back. And again, you know, you can start that cycle again. You can reinvest that at any point at which any of these 25% holdings that you have a capital requirement. We're able to list the shares on our secondary market, and you're able to have that capital back to you within a month as well. So like I said earlier, it's a very liquid savings account. We're able to offer liquidity almost on a monthly basis, and returns that, you know, you're not going to see anywhere in the market at the moment for this level of risk. You know, a minimum of a 4.5% return. And, you know, we can't say guaranteed because, you know, that would take away from the Sharia element of what we do. but we have done absolutely everything to minimize voids and maximize profit. So there really shouldn't be any void periods because we have tenancies with tier 1 agents. So you will be continually earning throughout your investment life cycle with us. Now, in terms of a practical live example, I can actually show you what you can see on your screen now. So we had Shaw Heath, which was the last asset that we had made available, £424,000. It sold out on the platform in 72 hours. So all of the pre-funders that invested in November had all of their capital paid back to them on the 1st of December with their first month's rental income. Some of them decided to keep a 25% share. And we had the Fright Building in Wembley lined up for all of those investors that had their capital paid back within 72 hours to reinvest into Wembley, which should go live on the platform on the 1st of February. We are just in the final stages of acquisition around that. So that is a practical life example of what I had just shown you on the previous slide. This is the first corner that we covered effectively. So the £400,000 we managed to raise via our network has then majority of it been recycled into Wembley, and people have started off that 4 investment asset journey with us. Some investors decided that they wanted all of their capital back, so they earned their first month's rental income and took their capital back. Others decided to keep a 25% stake. Really, the opportunity and the flexibility is yours as an investor with us. So these are 2 live examples that over the last 2 months we have executed on and are fully funded and will be available to retail investors. Just to touch base again, so that first asset in Shaw Heath, 72 hours it sold out with. In the asset we had previous to that listed on the platform, sold out within 7 hours. That was about £150,000. So again, the power of the platform and the demand is incredible. We have liquidity available to us to ensure that this is a monthly process. Now, how to get involved? This is one of the pre-funding assets that we have available to invest right away. It's available up in Scunthorpe, 5.3% net yield available on this. Full occupancy by North Lincolnshire Council from the day of completion. So this is something that we are preparing for pre-funding at the moment. The steps on the side, so finish your yielders profile and submit your application as a top yielder. So as I mentioned, the team members on the call today work really hard to ensure that there is a smooth process for your onboarding. Once you're ready to become a top yielder, it's fairly straightforward. You've just got to send us some additional details, proof of funds, so we're able to qualify you and ensure that you are, you're not using your entire life savings on this and it's a huge risk for you. We need to be careful that you understand all of the risks that which there are few of, but we always have to caveat this being a regulated firm. And then as soon as your profile is approved, you will start seeing a lot more of these types of deal sheets, which are offline deal sheets. You won't see these on the platform anywhere. These will be circulated only to our network of high net worths. And not only this is obviously pre-funding, but we will have similar development opportunities. So these are slightly higher risk, higher reward. They'll be anywhere between 6 to 12-month development opportunities. We'll acquire the asset, confirm all of the capex costs. So for example, if it's £100,000 asset, £100,000 worth of work, and we will also confirm the value that we will place the asset on the platform. So in this example, if it was £100,000 asset, we're doing £50,000 of work to it, we would potentially have it valued and listed on the platform for £200,000. So there would already be a £50,000 uplift, and then it would be ready to be tenanted by one of our tier 1 tenancy agents, and it would then start producing an income which you could either hold or release onto the platform again for your return on your capital. So again, becoming a top yielder does open the doors to a number of different off-market opportunities that we have. We also offer private placement. Something hugely interesting came across the desk today. High ticket item, but the covenants is so strong as 15-year FRI lease, and definitely something that we can potentially place private funds into as well, should there be interest for that. In terms of numbers, so based on what we have in the pipeline at the moment, 4 investment opportunities, geographically diversified. So as I said, in London, just outside London, up in Manchester, in Scunthorpe. A 6-person investment committee reviews each of these opportunities with a fine-tooth comb, very rigorous due diligence, and a collective 50 years experience between us in real estate and accounting. We've now been a business and operating for over 5 years, providing these sorts of deals and opportunities to everybody all over the world. Over the last year, a 4.8% net projected annual return from these investment opportunities. Now, how does this actually compare to what other investment opportunities are available on the market? So what you can see in front of you are some like-minded businesses or offerings, either within the real estate space or the Sharia certified space. And as you can see, our returns are far greater than anybody's. So you've got the likes of Goldman Sachs, Al Rayan, Brick Lane, NatWest, and UBL on there. In terms of liquidity, a lot of these have fixed terms. So the top two have 12-month fixed terms or 90-day liquidity notices. We are able to offer 30-day liquidity. So, if you list your shares on our platform, if they sell out within that month, we will provide all of your capital back to you the first day of the next month. So very liquid. We've never had an asset that's not sold out. All of the secondary market listings have always all sold out within record time. So again, the demand is extremely high. The premise and the reasoning behind webinars like this is to increase the supply. So with a larger pool of high net worths and a larger pool of top yielders, we're able to execute on a lot more deals. More deals means more opportunity for everybody. Now, our pledge when you invest with us, ethically minded investment opportunities in UK real estate, which is fully authorised by the FCA. So again, coming back to the safety, security, looking at the UK housing market, obviously there have been a couple of wobbles following 2008, but generally over the last 20 to 30 years, you see an upward trajectory. So it's a very safe and secure investment. Assets which are free from debt and leverage. So as I mentioned before, absolutely no financial products or interest associated with anything that we do. Everything is equity and cash based. Rental income paid as a dividend to your e-wallet on the first day of each month. We have now paid a dividend on the first of every month for 57 months and counting. On the first of every month, each one of our investors has received a dividend in their e-wallet on the first of every month. No hidden fees or any charges. Everything is transparent, and we have a profit and loss document, a financial summary with each and every single one of our investment opportunities. So you're able to look at where all the money is going, how much money we're earning, what other fees and costs there may be. We provide a diversified selection of properties added right across the UK. Clear, open and honest communication from all of the team members, and definitely something that we pride ourselves on. In terms of the efficacy and Islamic finance nature of what we do. Everything is by the book, above board, transparent and clear for everybody to understand. And finally, a friendly and attentive team who are always online, whether that be via our online chat or investor relations line, email, phone. A very attentive team who know everything about this business end to end to be able to provide the required responses. That is it in terms of me speaking and providing a overview of the business and where we're at. I'm just going to, I see there's been a number of questions and I'm just going to answer them. I know the team have been answering them, but I will add to that. The first question comes, is it possible to add the monthly rental income from pre-funding opportunity in the next possible opportunity? Yes, that is more than possible. So everything works via your own online e-wallet. So when you create a profile with us, you have your own designated e-wallet. All of your funds come into that from your bank account, and then you decide where you're going to put them. As I mentioned, at the moment it is offline, and we will place the funds by the end of the first quarter of this year. All of this will be automated, and you'll be able to go online when there's a new opportunity and fund it yourselves. But then all of your dividends and your returns are paid back into the same wallet. So after the first month of a £50,000 investment, you might have £50,500 returned to you, whatever the amount may be. And that will be paid directly to your e-wallet. So next time, if you're ready to invest, you might want to top that up, add to it, and everything is interacted via your e-wallets. Are you taking any debt to finance a property, or do you count completely on investors' money? Nope, there is no debt at all. No financial product per se with anything that we do. It's all equity, and yeah, no traditional financial instruments whatsoever. Can you explain your fee structure? Yes. So in terms of fees, actually what we do, we charge 2.5% of the total amount upon entry. So for example, if we have £100,000 asset that we're acquiring, what you will see in your financial summary is 2.5%. So it will be 102,500 plus stamp duty costs, plus legal fees, plus accounting fees. So even though the asset is worth £100,000, we may collect £105,000. Now that £5,000 will go to all of the additional costs, our fee, and then we will list that £105,000 on the platform for investment. So everybody's capital as a pre-funder is paid back. We then charge a 10% fee on rental income. So this is throughout the investment life cycle. So, but everything that you see on the platform is net of all fees and costs. We don't provide you any gross values. We give you the net value, which is the value that you will receive. So this is less all of the costs, less all of the fees, and that is the number that you effectively see on the platform. And then we charge a 15% exit fee. So if there has been an uplift in the asset that we have acquired at the end of the 5 years, we will take a 15% of the profit only. So not of your original capital, only of any profit if there has been any. Are there any new development opportunities in the pipeline for this year? Yes, there are. We obviously were focusing on completing the 2 that we had in the pipeline. As I've suggested, they are about 5 or 6 weeks away from practical completion. Once those are done and we've begun the letting process, we will definitely be analyzing, reviewing, and providing new development opportunities going forward. Please, could you provide some details of the due diligence and IC approvals process? Yes, so we obviously the first element of what we do is assessing the financial viability. So we've got a financial model that each of the assets is run through, which stress tests acquisition costs, excuse me, include all of the costs and changes, capital appreciation changes, this model that we built and advanced with over the last 5 years, refined and made even better. Once it passes that financial feasibility, we then look at the strength of the covenant. So the underlying tenancy, who's it with, how long has it been in place for, how many years are left? If it is an AST, is it fully managed? We then look at, we do a RIC survey in each of the assets before we acquire them. So a certified RIC survey is conducted on each of the properties to ensure that the value that we're purchasing at is in line with the governing body of this country. And we then make an assessment based on the viability and whether or not we believe it's something that will appreciate. We look at areas that are always looking at capital appreciation as well. And we always try and buy below market value. You know, we have, as being cash buyers, we have the opportunity to undercut people that may be looking to buy via leveraging or finance. And we also get offered a number of off-market opportunities. So these are opportunities which don't make it to the market based on our agencies, which agents and contacts we have within the industry. So once it is effectively checkboxed and ticks against each of these, based on the experience that we have within the IC as well, a decision is made that if it meets all of these targets and all of these thresholds, that is the point at which we will start fundraising for it. I think the team have posted an article in relation to the fees and stuff as well, so feel free to have a look at that. When a development opportunity is completed and listed on the platform, is there a revaluation done for the initial investors to realize a return? Great question. Yes. As soon as the development is finished and tenanted, we will have it revalued at that point. We would have already projected a valuation, which is backed up by a RICS report at the beginning. But to ensure that that has been executed against, we do have a secondary RICS valuation completed on the completed development, which then obviously should align to what we had projected. I'm assuming no interest is taken by placing the income into a bank account, right? We don't have bank accounts, they're e-wallets, so they're effectively a designated e-wallet which is only for you. So your login is associated with that, and it is just a way for you to interact with our platform. It's very safe, very secure. The provider for that is also a regulated firm, and it's all integrated with our platform via APIs. Is the net ROI mentioned with each property just an estimation that will be adjusted after the acquisition? No, so the net ROI for the rental income is not fixed, but it is as accurate as we can be. It takes into account all of the costs and fees, and with the covenants that we have in terms of the rental agreement, it is very secure and very solid. So the likelihood of us having void periods are minimum, but of course, it's always a risk. Your capital is always at risk. Anything could happen, but we've gone to all of the lengths to ensure that we've mitigated those risks as much as possible. The only projected element of our ROI is the total ROI, because it takes into account growth factors. Now, obviously, we do monitor these, and we use a direct link into Savills that provides us the information that our financial models are built off of. And effectively, that is the only thing that's subject to change, dependent on what the macroeconomic climate is. If there's going to be a rise and it aligns to the projections of this, then we're in good stead. Just to give you an indication, the first asset we ever listed, Gravesend, was due to produce a 30% ROI over a 3-year period. We managed to achieve a 50% ROI, which was executed and administered to all of investors available to that, which was a fantastic win for us. There have been other investment opportunities. So one in Milton Keynes, which actually reached the end of its investment opportunity. So we paid out rental income throughout the 3 years, got to the end. We were unable to dispose of the asset because it was literally as COVID happened last year. So it was March time. We were trying to sell it and it didn't quite work. So what we had the flexibility to do was reapply a lease agreement, so get the asset relet, so investors weren't stuck with their capital they were earning for another year, and we're then due to sell it this year. So we have the flexibility at the end of an investment time to reapply lease agreements and ensure that there is still a capital uplift available for investors, dependent on what the market is saying. In the comparison sheet between investor types for ultra high net worth, there's a bullet point about other investment types. What are those? These would be bespoke placement investment opportunities. We get some large ticket items. So for example, off the top of my head, one that hit the inbox today, £1.7 million acquisition, a 15-year FRI lease in place. So this is an agreement with a government body that will do all of the risks and repairs for 15 years, earning £104,000 per annum. When we plugged the numbers, it was just under 5% net return on £1.7 million. So stuff like that we understand isn't for everybody, but there may be a bespoke person that wants to park a large amount of funds. We would be able to directly provide an opportunity like that at a very high level to investor base. So these are directly, even if you have a liquidity requirement. So if you were to come to us and say, right, I've got £500,000, I want to invest, we would come back to you with bespoke investment opportunities, either a combination of pre-funding or something which is targeted just for you and what you're looking for. To add any funds in e-wallets are guaranteed up to 100% by Luxembourgish law, like FSC, and no interest is applied to these funds. Oh, sorry, that was from, I didn't see the question around that. But no, we're not FSCS regulated, because that is for banks only. We don't fall under that regulation. However, your e-wallet is your own profile. No one is able to access that other than yourself or us if you give us the right to do so. So if you ask for funds to be transferred somewhere, we're able to move those funds on your behalf. But other than that, it's a very safe, secure platform where your funds are stored. Is the tenancy secured before you purchase a property? If not, how do you pay the top yield as their first month rent? Yes, we will only acquire assets where there already is a tenancy in place. Unless we are developing something, then we will ensure that we have a tenant lined up to take over the tenancy. But any of the pre-funding opportunities, yes, we have tenancies in place, generally all with tier one agents, but there are some in the portfolio that have ASTs. Obviously, it's unavoidable. We do have some private clients. We prefer not to do that because the management oversight is quite laborious, and there is the risk of voids, which is why we prefer to work with the agents that we have. Is there a plan to create a tradable product like a REIT to increase diversification of the portfolio? It was in the works. There was a huge amount of research that we did last year in relation to a fund-based product or a REIT. I think if it is something that you follow, then you would have noticed the performance of real estate funds, REITs, since COVID happened, has been nothing short of terrible through no fault of their own. But obviously we are in a very difficult situation, especially when it comes to commercial real estate, people not being able to afford rental income, etc., etc. So what we decided to do was put a pause on that, go back to the core element of our business, which is the model that we've described to you today. But the research and everything, all of that has been done. And inshallah, we look forward to trying to create a new product or a new asset class in the future when I think the world has recovered from the difficulties faced by COVID. For investors outside the UK, how the money in their wallet can be transferred to their bank account. So we're able to register bank accounts directly to your e-wallet. So based on the bank account that you add funds with, we request the bank statement to be sent to us so we can verify it's yours. We will then add that bank account to your profile, and you're able to transact with it directly. We noticed that obviously that this is a difficulty, and Jake, our partnerships manager, created a document and a relationship with TransferWise not so long ago as well. So having a TransferWise profile also eases that transfer of money out of the UK. Is the investment period for yielders always 1 month, or does that vary if someone wants the full 100K investment back? We're able to offer the initial investment for 1 to 3 months. So you're able to take 3 months worth of rental income at the whole amount. But alternatively, if you want to hold 25% of your investment, or if you say to us, I want 6 months worth of rental income, you can hold your shares for 6 months and we can liquidate. There isn't a definitive way to do it. We are able to offer bespoke opportunities as well, as per the information memorandum and articles of association, which are the 2 legal documents which govern each of the investment opportunities. There are some requirements against that, but we're able to hold off listing on the platform for a period of 3 months if there is a requirement, if you want to earn. And then alternatively, you can list small amounts on the platform on a monthly basis. However, different bespoke ways of arranging these types of deals we're open to. We rarely would ever say no unless it does impeach and go against the governance of the overall SPV. Okay, I think that's it. Oh no, there's another question. In case there is a disruption in rent on a property for whatever reason, are investors fully exposed to that risk? Yes, being a shareholder within the SPV, of course. If for whatever reason we don't receive rent for that month, you will be communicated as such to be told. If there are any repairs or any works required, again, through the life cycle of a 5-year investment term, a boiler might go bust, there may be a leak or something along those lines. We obviously will work to have that fixed. And then the invoice retrospectively, we do accrue an amount every month from the rental income for small minor issues. But if there is anything that does arise, then of course you are informed. We will do whatever we need to do to fix the problem. And then subsequently, the next month's rent may be affected for whatever invoices we had to pay. But yeah, being subject to being a shareholder, effectively you are taking on that risk. However, with some of the tenancy agreements we have, they are full FRI leases. So these are leases where any issues or anything the tenant and the issuer of the lease deal with. So obviously these are the strongest covenant ones that we've got, and a lot more of these we have in the pipeline. Our previous stock and previous AUM has more ASTs, but I think, lessons learned, and over the years, we've decided to shift towards more tier one tenancies rather than any privately let ASTs. Not saying that we wouldn't look at them, but to avoid this risk and any issues, that we generally tend to go for FRI leases. What is the status on the current secondary market locks? So if you're referring specifically to, I think there is 4 or 5 SPVs that we've frozen our secondary market ability for. This predominantly was because there was a number of assets due to COVID, unfortunately, that were left untenanted, or tenants had moved out because of the impact of COVID. And we also transition management. So there is an amount from Universal Credit due to us that had unfortunately wrongfully been paid to a previous managing agent that we're working towards recovering. So what we decided to do to ensure that no new investors are coming in and not getting paid a return was put a temporary freeze on any secondary market transactions with, I think it's 5 or 6 different SPVs. I'd have to check with the team. But that is only temporary. We had some positive news today from Universal Credit that they've confirmed that they are still paying the old management firm. So there is recourse for us to go back to them and retrospectively gather all of those funds, which we are in the process of. But again, all of this on a monthly basis has been continually communicated to all shareholders, so they know exactly what's happening. And we're doing everything that we can to recover those situations. Are there investors asking to get back their full investment after just the first month? If yes, they will not just be able to recover the fees they paid. Yeah, effectively, if you're if you're a retail investor, so as I said before, we wrap all of the fees up into the overall amount. So if there's £100,000 asset, we'll list it for £105,000, because that incorporates our fee, it incorporates the costs of acquisition, etc., etc. So if you've invested £100 in that and you sell your shares, yes, there is a small relisting fee, but it's not a huge amount, and you will have the majority of your capital back after the first month, inclusive of your first month's worth of rental income. Just to make clear, that's only on the retail investors. You're not actually technically charged a fee when you're a pre-funder, even though you contribute towards a fee. Your capital is obviously all returned to you. That seems to be it in terms of all of the questions on the chat bot. I will leave it for another minute or so if anyone has any additional questions. We have just touched upon the hour, so it's taken us exactly an hour, which I think is always great. Yes, we are going to share the slides of a recording of the webinar, and the slides are going to be shared. Next steps for us, really, hopefully following this, we will be in contact with the webinar and the slides, and a direct link for you able to sign up to the platform. And as already mentioned, the investor relations line, which is a specific line associated for high net worths and sophisticated investors. It's got its own mailbox, phone number, and WhatsApp. So we're always on the line for that. So if there is any interest following this, or you have any further questions, please don't hesitate to get in contact. We are currently fundraising for a number of different opportunities, which have been shared with you on the pipeline slide. So if there is any interest in and around that, please get in contact with us, as the more investment that we can gather, the quicker we can get these deals done and provide even more opportunities like this to our investor base. If there are no more questions, oh, another one's just popped up. Are there any plans to extend outside the UK? Really, the focus is the UK. The difficulty being with other regions is not having local expertise on the housing market. Here we have expertise in the local housing market. We know the trends, we understand, and have agents and deal flow providers right across the country. We have always discussed expanding. We've got investors from all over the world. So it has been in discussion, but at this moment in time, it's a focus on executing here in the UK, making sure we get it right, and provide this service to our investor base. Okay, I think that's it in terms of questions. Thank you all very much for your time. I'm sure you're all sick of hearing me talk by now, but appreciate all of the interesting questions. Great to see people are in tune, alert. As I said, the team are on hand to answer any questions. We will be in contact over email and maybe some phone calls across the next few days. Thank you very much for your time and have a lovely evening.